Hey guys, Joseph James here, schooltrade.com. It's August 2nd, 2010. Now we've already done our live trade room recap for the evening, but I wanted to go over the trade we took this morning on crude oil. Had one of my members this morning had asked specifically, how did we know to get in that big winning trade this morning? Right, 188 ticks today. Took a small loss in the first trade at 9 o'clock on crude, but then you can see we followed it up here with just this monstrous winner, 143 ticks on the 13 range. And so people were asking, how did I know to reverse my position here and get long? Well, I want to give you guys kind of a more of a rundown here on this trade. Now, first of all, right, what we have to remember is we got started this morning thinking that we were going to be going short. Right? What do we see here? We had a sideways range, and we were trading at the highs of the range. Okay, so at the highs, guys, we're thinking short right off the bat. And our success last month in July confirmed we should be thinking short. So that's why our heads were focused right to the short side. Now you can also see we had a wedge pattern here. If you can kind of just right see that with me here, right? There's a wedge pattern here. So we were at the highs of the wedge. We're at the highs of the range. All right, so right off the bat, I'm thinking short. And that was really kind of what prompted us to get in short in the first trade. So here was the first move of the day. Now you'll notice here what happened was we had the short-term trend was up. All right, and guys, as we know, we've seen these markets break through, right? Break above the sideways range and then tumble right back in, right? So that's what we were looking for. We were expecting the crude market here. Again, here's my sideways range. I was expecting crude here, right, to break out, but not to go very far here, and then we'll take the short going right back down in, right? That was the idea. So, of course, here we are. Look for my short. And so I get in below my swing low here. There's my two-step pattern short here, 9 o'clock. Right? This is a great-looking trade. Of course, 9 times out of 10, this is going to drop +4, +8, +20. Okay, this is a nice big winning trade written all over it. But something happened, though. Right? The sellers never really got their teeth into the market. Right? They never really got their arms around the market. You can see right here because what we didn't go over today in the morning video was this chart. Now I wanted to zoom in for you guys here and show you kind of a little bit more of a, well, you can see here this is a 13 tick. And the 13 tick chart, guys, is going to be what I call a visual depiction of price action. Right? Imagine your time and sales window in the form of a chart. Right? Well, this 13 tick chart, notice the fib number, right? If you wanted to watch on the S&P, be a 55 tick. Okay, 13 tick, 55 tick, 89 tick, 144 tick, right? They're all fib numbers. All right, guys, more info on that in the trade room. But let's focus now here, right here, though. Okay, let's focus right in the middle here because that's where we actually got into the trade. So here was my swing low. We break below that swing low, and of course, there's your entry there for your two-step pattern short. Now remember, guys, this is a very fast time frame here. So short-term trend is going up here. We're going to break below that swing low, and there's your entry. Now notice what happens, and I'll zoom in on this for you. You can see we make one push down, right? We make a bottom. We then come back up. We make a second bottom here, and of course, I'm watching this now on my time and sales window, right? I'm watching as, right, 40s come, 40s, 40s, right? Then 41s, 42s, 43s. Okay, so I'm watching the time and sales window. And this, of course, is a visual depiction of that price action. So what do we see here? Double bottom, and then what do you know? There's a swing high level right there. We break above that swing high, and that would, of course, be a two-step pattern, right? But that two-step pattern, remember, it's a simple reversal pattern. That reversal pattern now does two things. Okay, when I see this reversal pattern here, and once again, okay, here's what it looks like. Okay, the reversal pattern looks like this. Right, here's my blue line in the middle. Okay, we're going to come down. Right, there's my pattern. I'm going to mark up this little swing high right here, and there's the trigger right there. Now, when I break that swing high, right, what is that telling me now? It's telling me two things. The first thing is it tells me to exit my long trade, my short trade. Right, get out now. Right, in fact, get out 10 minutes ago. Okay, it's telling me, Joe, you made the wrong decision here, buddy. Okay, you gave it a shot, you did everything you could, but you were wrong. No big deal. Get out. So we hit the exit button. Well, guys, what is that also doing now? This market's giving me feedback. And the second thing it's telling me is you better get your head in the opposite direction now, Joe, and look long. Right? Get long here. The market is telling you the reversal is failing. And when a reversal fails, what do you think is the natural reaction? To go back with the short-term trend. So, of course, we've been trending up the whole time here. We were trying to take this little reversal to try to catch everybody off guard. Didn't work. We got out early when we saw, right, the break of the new highs there, the reversal pattern. And the same information the market gives me that get me out of my short trade, right, is now what tells me, right, flip right around and now look to the long side. So now here we are. And guys, this is where you've got to be ready, willing, and able to react. This is why your prep every day is so important. Right? Now, you don't want to be at this point. You have no time to be right looking around. Okay, where's my next chart here? There's got to be a 30-minute here somewhere, right? It's too late, guys. It's too late. Okay, you've got to be looking at your 13 range right now. All right, and that's exactly why we take the time to go over all these charts before we start trading, because now what comes up next? Now we see our 13 range. And so we already know now we were looking short. We made the wrong decision. Okay, the buyers told us, right? Big buyers, momentum curling up, speed reversing. So with all of that feedback from the market, I'm now flat on my short trade, right? A little bit of a loss there. And I'm now instantly looking for the long trade. I've got a couple charts I'm now going to look for. All right, now I'm not scanning every possible time frame here, guys. I've got a couple charts. I've got a 34 range. I've got a 21 range. I've got a 13 range. All right, guys. Now, if you're not familiar with range charts, go to our blog, search for range charts. Okay, but what you're going to see here, though, is right, 34 range didn't have a pattern. 21 range didn't have a pattern. And there we are, 13 range right there. Okay, so now, we initially, you can see right here, we had initial entry a lot lower here, below 80s. Okay, but we couldn't get into it, though, at the time. We had to get above the big round number. And remember, 80s was the top of that range. So our next opportunity here was to take this pattern right here. And of course, that's exactly why we took it. We had received feedback from the market. The feedback said, right, the short sides are the wrong side. You better be getting long, ladies and gents. So we used the feedback. We were prepared with our 13 range chart. And then the last thing was we had to wait for the trigger. Right? We knew big buyers, momentum pointing up. And you can see that trigger here, guys, right down at the bottom here. So there's my entry here. Follow me down bottom. There's my trigger. Momentum curls and points up. Big buyers in the tape. Lots of speed. And then one last thing. How do we plan our stops and targets? Well, first of all, remember, 13 range trade, we're not going to have the pre-packaged, right, template stops and targets. They're always going to be different. So, of course, what we did was we looked at, right, first target, overhead resistance. Second target, overhead resistance. And then we had a way of finding our third and final target. How do we find that third and final target? Well, actually, what I did was I used this swing high here to this swing high here. I measured how far, right, that length was, right? I measured that right there. And then I said, okay, above our entry here, we're going to take this amount of range up to here, and there was our final target, right? A little bit messy, but it's called the AB equals CD pattern. And basically what that pattern tells me is that the length of trading range from one swing high, right, to the next, or one swing low to the next, right, that trading range right there is going to be very similar now, right, to this trading range. And as you guys can see here, right, it's almost identical. So that's how we found our third and final target. And wouldn't you know it, little bit of patience, right? 81.50 got filled after about 20 minutes being in the market. All right, guys? So once again, remember, what got us off on the right track here was watching this slower time frame. And we do the right thing by starting every day with our morning prep. We took the short trade, but the market gave us some feedback that clearly told us we had made a wrong decision. And guys, the market only goes either once, right, one way or the other way, either going short or going long. So when the market told me, nope, not going short, we now look to the long side, and because we are ready, willing, and able to react, we took the trade on the 13 range. Guys, my name is Joseph James. I want to thank you guys for joining me today. A little bit more in-depth review here, guys. We'll see you guys tomorrow morning, 7:45 a.m. We open back up. Bye-bye for now.